Hello, everyone. Hello. Thank you for joining me today. It's the 12th of August, and today is Monday, the beginning of a new trading week. And of course, since it's a new trading week, so it is time for our weekly analysis webinar. We have had a pretty great week for the past one, and basically, if you guys attended the previous weekly analysis webinar, it was exactly at the time when we had huge selling pressure in the markets and we had this panic and everything. However, we have mentioned a lot of, or some levels that we expected, that prices wouldn't be able to break below. And so far, we were pretty much accurate, thanks God to our analysis. And we have had some great moves during the last week. And this week, I believe we'll have some extra volatility because it's the CPI week, and we'll talk more about those expectations. So yeah, I'm pretty much happy to be here with you. Just send in the chat one if the voice and the audio, the video and everything is working fine. Just send one in the chat. So I need to make sure everything is working. Yeah, okay, it's working fine. Good morning, everyone, and good morning to everyone around the world. And today, of course, we're gonna talk about the expectations for the week ahead. Yes, I personally do expect some volatility. Of course, it won't be as the previous one. And we will have some pretty interesting analysis today, because when we look on the weekly closes or the weekly candles that we had, it's really interesting. And we'll get to that in a minute. Let me just open up and start with the economic agenda for today. And let me just, center myself here, get myself ready. And yeah, here we go. For the economic agenda, I think it's not. Yeah, I think this makes a little bit. Why is it not, Yeah, okay. Let's start by having a look on the economic agenda for this week. And with all the respect to people leaving their emails in the chat, I don't know why you're doing this, and don't do this. Okay. We are here for the analysis. We are here just to talk about markets. I don't really know why you're doing this. What are you expecting in return? Just focus. Okay. Okay. I'm getting a little bit now. Okay. Anyone who will leave the email in the chat will be excused out of the webinar. Okay. There are people here who want to learn about the markets, and that's why we are doing this. Okay. Starting with the economic agenda for today. And yeah, we can directly see that the Asian session market had lower volatility than usual because the Japanese markets were basically closed. We have nothing to look for. We only have the OPEC monthly report. And yeah, as we explained the EIA short-term energy outlook last week, we will be explaining the OPEC monthly report during the next week. Maybe they will say something of interest. And we will also have a look on the New York Federal one-year consumer expectation, or the consumer inflation expectation. So it's, at the end of the day, it's inflation expectations. Okay, it's not an actual number, but sometimes markets do concentrate with that, especially that it's the 1 year. And this is where, most of the people want to know expectations for inflation. But so far on Monday, I wouldn't say really that I'm expecting higher volatility than usual. It should be a smooth start to markets. And so far, we are having pretty much nothing in the markets. Okay. Starting tomorrow, Tuesday, the 13th of August, we will be having the labor market data from the UK economy, or the British economy. And it is important because the claimant count change is similar to the NFP, or similar, let's say, to the jobless claims, but this is from the British economy. We also have the unemployment rate expected to go higher a little bit, from 4.4% to a 4.5%. And we also have the average earnings index, which is the wages. Let's say it's the wages index for the UK or the British economy. Someone says the sound quality is very low. Can you please confirm in the chat whether the sound is good or not, whether it's from my end or it's an issue from his end, Ram? Maybe it's something from your end. Sound is good here. So yeah, most probably it's an issue with your headphones or something. Okay, thank you guys for confirming. So tomorrow, yes, we will be having very important data coming out from the London session because it's the labor market indices. Let's say we will be having the wages, we will be also having the claimant count change and the unemployment rate. So yes, I do expect a strong start tomorrow for the London session. We will also have the IEA monthly reports, not so important. And the ZEW, yes, it's important. The ZEW economic sentiment, it's somehow, it measures the how people, businesses, investors, consumers, and everything, how they feel with the economy in the German economy. So we have the German ZEW, and we also have the Euro ZEW economic sentiment. So this, in addition to the labor market data coming out from the British economy, this would be 10 a.m. and this would be 1 p.m. So yeah, I do expect a strong London session tomorrow. I do expect this to have a lot of impact. And yeah, let's say we would be expecting higher volatility than usual tomorrow during the London session. And moving forward to the US session, we will be having the core PPI, which is the producer price index. The producer price index is, let's say, number 3 on the measure or on the list of inflation numbers. So first of all, in my opinion, I do place the PCE as number 1 in importance, which is the personal consumer expenditures, not because I do like it, but just because the Federal Reserve likes it. So the PCE comes first, second comes the CPI, which is the consumer price index, and third is the PPI, which is the producer price index. This will be announced on Tuesday. And just because the previous numbers were a little bit higher than expected, so markets would be focusing a lot on the core PPI and the PPI, which is the producer price index for the month of July, to be announced on Tuesday. So yeah, let's say Tuesday, it's a heavy day. London session, we have news from the labor market. We also have the ZEW economic sentiment from Germany and the Eurozone. We also have, okay, someone just left their email again. It's Andy. I'm sorry, I'll have to excuse you out of the room. I'm sorry. Remove. Yeah, because we are here for the analysis. We're not here for anything else. Thank you very much. Guys, please don't leave your emails in the chat box. This is now becoming a problem to me. Okay. So Tuesday is an important day. London session, we have the labor market from the British economy. Moving forward, we have the ZEW economic sentiment. We have the PPI numbers for the US economy. And we also have some speech from a FOMC member who's Bostic. Okay. So definitely after what's happened during the last week, all of the volatility that we had, FOMC members' comments are important. Okay. So Tuesday so far is an important day. Of course, Wednesday to me is the most important of all days during this week. And look at how many news that we have. First of all, we will be having the Bank of New Zealand interest rate decision. Okay. And the monetary policy statement. Bank of New Zealand, or the Republic Bank of New Zealand, is expected to keep interest rates around the same levels of 5.5%. No change. However, we will also look at the monetary policy statement as usual for any hints about the future course of expected monetary policy actions. So that's the beginning of the Asian session. Moving forward to London session, we have the CPI from the British economy. Guess what? CPI is expected to move higher from 2% to 2.3%. That's a big move. That's the CPI on a yearly basis in July. That is a big move, okay? So we will definitely look at the CPI numbers and of course the GDP from the euro. Okay, Wednesday is a heavy day. So interest rate decision, we have CPI, we have GDP from the Eurozone, we have the core CPI and the CPI from the US economy. That's the main risk event for this week. So the core CPI is expected on a yearly basis to move down a little bit from 3.3% to a 3.2, which would be great. And the CPI is expected to stay around the same levels of 3.0%. Guys, hopefully, the CPI doesn't show any unexpected up moves. Just expect not even up moves. Even if the CPI stayed around the same levels, guys, markets are going to become ugly, really ugly. Why? Because first of all, you're having the labor market and the US economy really slowing. And this is what we have seen during the last NFP figures. And that's why we have had this, panic in the markets last Monday, because on Friday, the first, of this month, which was exactly the second, we have had the NFB numbers and we have had this uptick in the unemployment rate. So the labor market is already ugly. However, I hope that the labor market is cooling down a lot while CPI is cooling down. Because this opens the way for the Federal Reserve, of course, to cut interest rates, maybe cut more than 25 basis points in the next meeting, which markets are currently pricing in. So markets are pricing in 50 basis points for the next cut in September. However, this has a condition, which is that the CPI continues moving lower. What happens if CPI doesn't move lower or shows that it's still sticky? It's still around the levels of 3%. Um, I really don't hope this scenario happens, because then markets will say, okay, inflation is not so easy to come down and the labor market is already loosening. So yeah, we will continue to see fears of recession in the markets. We might see an extended wave of sell-off in the market, especially on the equities. And we will see what this happens and how this happens. Okay. But hopefully we will see just a downtick in the CPI and the core CPI from, 3%. CPI is not expected to move down, but the core CPI is expected to show a little bit downward move to 3.2% from 3.3%. Okay. Great. We also have the crude oil inventories numbers. And let's see how this plays out. So far, Wednesday is the most important day of all. We literally have important data and releases, to follow up in the Asian session, in the London session, as well as the US session. Moving forward to Thursday and Friday, I don't really believe we have a lot to watch. We only have the GDP from the British economy. We have the manufacturing production, trade balance. Okay, that's some good data here. The jobless claims from the US economy and the manufacturing index from the US. Guys, another good day. So far, Wednesday is the most important, or the highest expected volatility, followed by Thursday, which is expected to have some data in the London session, GDP, industrial production, and manufacturing production, as well as the US. We will also have the jobless claims, we have manufacturing data, and we also have the retail sales is important. Industrial production, another FOMC member, Harker. So we have Bostic and Harker speaking during this week. So be aware, Monday, Wednesday, and Thursday, they're going to be big days in the markets. Moving forward to Friday, we also have the core retail sales. Okay, I can see that during this week, starting from tomorrow, every day is important for the London session, specifically London session. So on Tuesday, tomorrow, we'll start with the labor market data from the British economy. We will have the CPI from the British economy on Wednesday, the GDP on Thursday, the retail sales on Friday. So if you want to trade markets successfully this week, I would advise you to trade the London session. Why is that? Because the London session, it is volatile enough for you to have some profits and to find some good moves, but it's not so risky like the New York session, in my opinion. So those numbers and those data will provide enough liquidity during London sessions during this week for you to be able to trade. Because sometimes when markets don't have any news during London session, it is really boring. So it depends whether there are, data releases or not. London session is too volatile. It depends. Sometimes it's too volatile. Sometimes it's too boring according to data releases. But at the end, you can never say that London session is more volatile than the US session. Okay. I find London session the best for more than one reason. But the reason is one of the main reasons is that it's in a sweet spot between Asian session and the New York session. I'm talking about the normal or the common days in the markets. Most of the time, Asian session is really boring. New York session is a lot of fireworks. How to find the, a sweet spot of liquidity and volatility between both? It's normally the London session, even more because, I'm here in the MENA region. So London session timing is well enough, goes well enough with my working hours. So I'm available to watch the markets during that time. So my advice is on this week, if you're trading intraday, London session might be good enough for you. We also have some housing permits and building starts and building permits during this week on Friday. And yeah, that's it. That's it. We also have the COT traders reports. Okay, I can see some questions here. Wednesday is bound to be wild. Yes. The CPI at 10 a.m. is going to have a huge effect on market. Yep. US session will most likely push it in the same direction of trends. You can never expect the US session because literally they can do anything. Which effect is stronger, sir? Fundamental analysis or technical analysis? They are both effective. Fundamental analysis, you need to understand the difference, okay? Fundamental analysis, it's a directional tool. If you want to know where markets are likely headed to, you must follow fundamental analysis like interest rate decisions, like CPI numbers, and so on. Because if you know that the Federal Reserve, let's say, will be cutting interest rates on the US dollar soon enough, why would you buy dollar? You will just be looking at, dollar shorts, or at least if you want to buy dollar, you must know that this is against the fundamental trend. So the fundamentals let you understand how markets are expected to move in the next period. I mean, in directions. However, technical analysis is a timing tool. You know when to enter your trade based on technical analysis. And I see a lot of people do this silly mistake of depending on technical analysis, previous history to predict the future. It doesn't. Sometimes, yeah, history works well. But if it doesn't work, don't say technical analysis is a scam. It's not. You entered according to technical analysis, okay, but in the wrong direction fundamentally. So if you know where to trade, where are markets most likely going to, according to fundamentals and according to the real factors affecting markets, you can then use technical analysis to time your entries. Okay, I'm looking for dollar shorts. Where's the best levels to short the dollar? Only then you can use resistances and expect supports to be broken because fundamentally the dollar is expected to go down. So they complement each other, to be honest. And that's why I'm trying to do both on the live session or on the webinar here, because I cannot do only technical analysis without fundamentals. I cannot do fundamentals without technicals. Okay, isn't volatility good? Shows change whether up or down, but no boring. Yeah, volatility is good. But as they say, it's a two-sided sword. Yeah, you can make profits because there is volatility in the markets, but if you're on the wrong side, you can make losses. How to solve this? By using stop loss. That's simple. Getting out when you should get out when you're on the wrong side of the market. But yeah, overall volatility is good because I don't like entering a trade and waiting ages for my TP or my stop loss to be hit. Even sometimes, I know that prices will be moving towards my stop loss. I'm bored. Just hit my stop loss and call it a day. I want to start a new trade and so on. That's true. London session is surely better than New York. I prefer Asian, though it's slow and steady. Asian is good, but if you're looking for only for like 20 to 30 pip range. Okay, I can see people starting to ask about the specific pairs. Let's have a look on the technical analysis here. It's already 25 minutes into the session, so yeah, it might be time for technical analysis. Please leave your comments section. Please leave the pairs. Can we buy Euro Yen for the next week? I'll check it. Which is effect stronger? Okay, done. Do you expect the Republic Bank of or the Reserve Bank of New Zealand rate decision to affect Australian USD? Not so much, not so much to be honest. Okay. Let's start by having a look on the dollar. Guys, if you were here during the last weekly webinar, please leave it in the comments section if you remember when I said that the levels of 102.50 will stop the decline and the panic selling on the US dollar. Because when we were live on Monday, it was 12 a.m. or 12 p.m. I mean, we were trading just around here. Okay, let me just remove this. We were just trading around here when we were live during the last week. And after this panic sell-off, we were starting the week with, I said that I don't think this sell-off will continue and that the levels of 102.50 will be strong enough to stop the decline on the US dollar. How did I know this? Simply by combining two demand zones. We've even explained this, and the recording is on YouTube. We said there is some sort of demand here, and there is some sort of demand here. When we extended this demand, and we got the levels, the both levels or the interchanged levels between the demand zones, we got the 102.50%. And we said this is enough, to stop the decline on the dollar. When you look on the weekly candle, it's somehow confusing, okay? Why is that? First of all, because we are having lower highs and lower lows. So it's supposed to be bearish. However, it's a hammer candle. We touched those levels. I don't really like the higher or the upper wick to be this big, but this shows that we have touched some sort of demand here when we went down and immediately went higher again. So something tells me on the weekly, although it's a lower high and a lower low, that we might be heading higher during this week. Okay. Okay. On the daily time frame, it's basically bullish. Friday was a little bit, indecisive, but overall we're having higher highs and higher lows. Even this indecisive candle, we have had higher low, but a lower high. So far, no bias. Okay. On the 8-hour time frame and the lower, maybe the 4-hour time frame, no, I don't like what I'm seeing. although I was the one to tell you that the levels of 100 and 250 will stop the decline, and it did, the upward move and the price action here, it's not a reversal. It's a retracement, okay? It's not strong enough as a rebound on the short time frame to say that, okay, now we will be heading higher. No, I don't think that's the case. I think this is a retracement to go back at least and test the levels of demand one more time. And you see this level? I think this will be the 61.8% of Fibonacci retracement. Wait, just remove this. I need to add this. Remove the 0 and the 1. And this is what we get. So the dollar is in a retracement phase. Yeah, on the short time frame, we are heading higher. But I think to test the 50% or at the most is 61.80%, and we will be heading down again. So I'm not really bullish on the dollar for the week. I'm bearish. And I'll be looking for shorts on the dollar either from 50. I need to change this because it's somehow confusing now. Either from the levels of 50%, which is 103.50, or the 103.80, which is the 61.80%. I'll be looking for dollar shorts during this week, and that's that, okay? Moving forward to the euro. Pretty much we have done nothing during the last week. We have said that this is a corrective, manner. Yeah, we were here on Monday, right? Yeah, exactly. On Monday, I exactly remember what we said, because we said the euro has many resistance zones. We said we have this one, we have this one, and also we have this one. Those were the resistance levels that we were, talking about during the last week. And also, while we were saying this, markets were pretty high here. We said we don't expect that the euro will push any higher because it's a really tough resistance zone, and we are expecting a move lower to gain momentum and then break higher. And yeah, that exactly happened. We have had this retracement lower. We are still in a corrective phase, and I believe during this week we might end this correction somehow and move again higher. So because I'm bearish, not because I'm bearish on the dollar, but it's good that I'm bearish on the dollar, and on the other hand, I'm also bullish on the euro. Yeah, you can never try to tell me that this is a reversal price action. There is no any bearish pressure. Where are the sellers? Okay, if the sellers who entered here were not able to break and close below the previous low, which was here, so no. There are no enough bearish pressure on the euro. Even though I do really expect a continued move lower, I don't believe that this downward retracement has ended yet. But I'll be looking to buy the euro during the week, probably from the levels of 1.0880 or 1.0850. This is how I personally feel about the euro versus the dollar, okay? You hit bullseye. Yes, you said that. Okay, yeah. We do have some people here who remember. Last week, Monday, I opened a buy during the webinar on gold lol and made huge profits. Okay, that's good. CPI in US session, most likely to have the same effect with a retracement first. Good luck trading the news. Gold, we will look at gold. The market touched support and came back to retest support, so it will push up again. Not sure what market you're talking about. What might be possible stand of gold? Okay, I'll check gold. How about euro? AUD. Let's see. First, let's have a look on the pound versus the dollar. Definitely bullish. On a weekly time frame, it's bearish because 1, 2, 3, 4. Okay. However, something in me tells me that this decline, followed by a huge upward move, there's some sort of demand here that we might have touched on the lower time frames. Let's see if I'm correct or not. This decline, followed by a huge upward move. Let me see if it's more available here. Yep. Let's say that's the upward move, okay? That's the, let's say, impulsive upward move. So markets were trading somehow bearishly here. And then we had something around those levels that pushed prices higher. And exactly the price move started here, the impulse move. So that's a decline. We formed a base and we had a rally. Okay. I think now the voice will be higher a little bit. So it's a drop base rally. And without seeing where prices, went to, let me see this base. I will do a webinar about supply and demand. But to me personally, how I draw my supply and demand zones is that, first of all, I have a look on the leg in, which is the decline, the leg out, which is the rally. What's in between is the base. So in order to draw the rectangle for the demand zone on the base, I draw it from the highest body of the candle inside the base to the lowest wick. And we will go more about this in the next webinars, okay? Let me just add this a little bit. Okay, so that's the demand zone for me. I would really love if prices have really touched this. Boom, we touched. That's why the pound versus the dollar, exactly on this candle, on Thursday, it went higher. Okay. So yes, that was institutional buying. There were some unfilled orders here. When prices got back, it literally just, went higher, only around 75 pips in one candle. So yeah, I'm bullish. I'm bullish on the pound. I'm 100% bullish. It's a demand zone. We have come back. Yeah, we are definitely moving higher. Even on the 4-hour time frame here, we have done maybe one. That's a double bottom. And we also have another demand zone here because we had a drop base rally. So again, this is another demand zone that we formed during the last week. I'm definitely bullish on the pound. However, let me tell you something. On the 1-hour time frame, you can see momentum is weakening here, right? And you can see that the upward move was great. However, started, to move. It's still moving up, but slightly up. So for me, I think that would be a great buy opportunity during this week. I would be waiting for, wow. I'll be waiting for the pound to go down. First of all, it will face some price action here. That was a previous support. That was a previous resistance also, became support, so we might come back to test it, which is also the levels between 38.20% and the 50% Fibonacci, which will also trigger some buy orders because that was a demand zone, a fresh demand zone. So guys, the levels of 1.2725, roughly, it's not, an exact price, but I'm talking about the um, let's say between 1.27 to 1.2730. It's a good buying area for the pound. And yeah, I'll be looking to trade this during the week. Don't want, to stress it more enough because, okay, that's for the pound. I think we have had a question about the something versus the AUD or the Australian. Czech NAS, dollar, yen, euro AUD. I haven't looked on the euro Australian for ages. However, I'm here to answer your questions, so let's do it. 100% bearish, guys. What is this? This week or the previous week close. If you trade with SMC or the smart money concepts, you can see that one candle, it just, it took liquidity from a lot of highs. This one, this one, this one, however, managed to go lower, 100% bearish. There is no word about it. Okay. Um, so on the daily, bearish. On, however, wait. On the daily time frame, yeah, I'm bearish. But you see this rally, base, rally. So again, there's some sort of base here and a demand zone, which we are trading around at the moment. Excuse me. So I would say I will buy, I will sell the euro versus the Australian dollar after only breaking the demand. Or, okay, so it's drop, no base, no base. Where's the demand here? So it's rally, base, drop, base, drop. This is not a base. This is not a base. Anyway, let's say this level started the upward move. Okay. Momentum is weakening to the downside. Yep, and we do have a bullish divergence. Okay, the euro will have a good opportunity during this week. However, it depends on how markets will pay out because we do have some levels here, which is the 65, 1.65, okay? Sorry, 1.65. We will definitely drop to test those levels. And personally, I would really think of buying what with a very low risk for a retracement. And I'm expecting some sort of a sideways range here, either to break lower or to break higher. So yes, we might have, maybe not this week, but we might have a good trading opportunity on the euro versus the Australian dollar somewhere maybe around next week. So it's a demand zone. Either this demand zone says, okay, enough for a correction and let's head higher, or maybe you can break and head lower. But the levels of 1.6500 is key on the euro versus the dollar. The pound tested support twice in the demand zone and now will move up. Yep, definitely buy. Okay, short buy. Yeah, short buy. I'm talking about a short buy on the euro versus the Australian dollar. And once we get out of this buy, which would be a short one, we will see how things play out. Let's have a look. No, not gold. I'll have a look first on the US indices. Yep. Okay. Look at the weekly close. I know it has been a hell of a week, a lot of volatility. However, look at the weekly close. The close is literally unchanged. Only Nasdaq moved around 160 points, 160 points on, no, sorry, it's the Dow Jones. 160 points on the Dow Jones is nothing. It's 0.4%, okay? Usually the hammer candlestick is a bullish one, by the way. So there was support here, a drop base rally or a demand, let's say. And again, there was one here. So we had some sort of demand here. We had the rally, base rally. So another, some sort of demand. We touched both and we moved higher. So something in me tells me I'm slightly bullish on uh, on the Dow Jones. Yes, on the on the daily time frame, it's a drop base rally. So yeah, from here, this is a demand zone on the daily. Forget about everything else. Prices were moving lower. 1, 2, 3, the sell-off that we had in the markets. We had 2 days of moving sideways with poor price action. So that's the base. We had boom interest in buying stocks and demand one more time. So yeah, this is a demand zone. The 8-hour time frame, this is what we have. On the 4-hour time frame, yeah. Let's say I would love for the Dow Jones to move lower to the levels of 38,900 in order to push higher again. Guys, let me tell you something. We have a lot of data during this week. CPI, manufacturing, production and industrial production and so on. So it will really be according to the news. But at the end, we are, trying to do some technical scenarios here. So I'm slightly bullish on the Dow Jones. Of course, it will be pretty much the same on other indices. Let's say the Nasdaq drop base rally. Okay, this is the demand here. Again, I would really love for the Nasdaq to drop to 1800 before moving again higher. Okay, pretty much it would be the same on the S&P. Here we go. 1, 2, 3. Explosive candles lower. So that's, the leg in or the selling pressure. We had a base here. Boom. Moving higher. So that's the demand on the S&P. Again. So yeah, let's sum up the US indices quickly. On the Dow Jones, it's around, let's say, 39,000. On NASDAQ, it's 18,000. On S&P, it's 5,200. Those levels, to me, might represent some demand zones during the week. And of course, if you're buying your demand, you need to make sure that your stop loss is way below the level of demand and you just let it run. Okay. How many points for stop loss? It depends. It depends on the demand zone itself. Gold. Okay. Someone is selling gold now. Okay. Wait. Gold will buy and buy because it broke its highest high. Or is not to give you stop loss. It's to teach you learn. Thank you. Thank you very much for saying this. Let's say gold because I can see people here are buying gold already. While basically, yeah, 100%, 100%, 100. It's risky, guys. Okay, it's risky because you are buying here or any level here. It's around the equilibrium level of a major sideways. Maybe you have your own, reasons on the smaller time frame. Okay, it broke a higher high, it has a higher low, and so on. I definitely see your reason of buying gold. However, to me, I would see it a little bit risky, but I have my fingers crossed for you. But yeah, it's a good one. Of course, depending on where you have your stops placed. But yeah, I would say definitely gold is going higher to the levels of 2460 at least. And yeah, it's a ping pong trade, higher, lower, and so on. 2433, that's good. Okay, so it's a ping pong trade between resistance and support. Make sure that you please get out on 2460 because it's a demand zone. It's a sideways range. You're near resistance, so that should be your target. Anything more than 2460 could be achieved, but it would be a little bit risky. Okay, so personally, if I'm in this trade, definitely get out at 2460, and we will continue monitoring how gold plays out during the week. But I do personally expect the levels of 2460 to hold out because there is no really reason for gold prices to break higher, with all the respect to fears of recession, because fears of recession were previous week and we have had this great downward move. So I don't really buy in those fears of recession. So yeah, guys, you are great. Everyone who bought gold will make some profits. So yeah, probably you should buy me a watch for a gift or something, a Rolex. Okay, short trade always profits. It depends. It depends. Some traders basically, and this is really important to look at. Every period of time, you must have a look on your account statement to see how many long positions you win and how many short positions you win. Personally, I'm a more successful long trader. I don't know why, but whenever I short, I have double the risk for some reason. Okay. It's just, maybe by luck, but statistics say that I'm a good buyer. I'm not a good seller at the end of the day. Okay. We do have some questions here. We have answered. Okay. We do have some analysis here. Some things, guys, some analysis are not to be shared live. Okay. Not sure if this would be clear enough for you or not, but some things that I cannot just discuss in a webinar. What do you think of AUD USD? I think that would be the last thing to look at before concluding this session. You short Nasdaq till 18,000? No. It would be, in order for me to short, guys, I'll tell you something, because you need to know that not every move in the market you should be in. Some moves you will just have to watch. Okay. In Nasdaq, yeah, guys, I might. Yeah, because it's good enough as a short. As I said, I'm very bad seller, but I can see it's losing momentum, really losing momentum here. So maybe on the short time frame, very short time frame, you would just wait for a break of structure. So yeah, shorting back to the 1800 or 18,000 might be a good opportunity, not for me. Okay. AUD USD, where is it? Where is it? Okay, guys. Here we go. Hello, can you hear me now or can you see me right now? Not sure if it's working. Again, we ran into some technical issues. Yeah, I'm back. Okay, anyway, it's already 5 minutes till my next live analysis session, which will be on YouTube to our clients in the MENA region. I'm really sorry for this terrible technical issue. However, I think we are done here anyway. We have discussed pretty much everything that we needed to. Um, and yeah, that's what I need to say. It's anyway, I just came back to you to tell you that I'm done. Okay. Uh, any questions left? You can have like maybe a few minutes. If you have any questions, please let me know. Let me try, to do the normal share screen. Screen two. Yep, here we go. I think right now you'll be able to see my screen in case we need it. What is Fibonacci? It's a big topic. Maybe can you explain what is Fibonacci in detail? I'm sorry, but no, 100% no, because it will take time. So maybe maybe we will be having a separate webinar to explain Fibonacci soon, but I mean not now. Of course, it will take like 1 hour to do it. What you use indicator? I don't really use any indicators. We just I just use this momentum indicator. Any momentum indicator will do, just to have a look on how prices are moving, whether it's a strong move or not. Do you use some sort of order book application when you are trading? No, I don't really. I look at the COT reports only, just to know how things are going in the world, who's buying good on the long term, who's selling, and so on. So I'm interested in the COT um, reports. In trading, I love to sell. So what currency good pair to sell? Even in my real life, I sell everything for money. When I don't get the credit for the season, I'll sell my phone, guys. Good luck. Okay, I think I'll have to conclude this session right now. Yes, personally, I will say that London session will be good this week over the New York session. Thank you very much for joining me during this webinar, and thank you for staying till the end, guys. You are really great. And one day you will be all profitable, consistent traders. I'm sure of it. Thank you for joining me in today's webinar. Of course, we will be seeing you again next week. No, not see you on the 14th. It will be the 19th. Yeah. Please trade safe, stay safe, and enjoy your week. Goodbye. Stop share. Where's the end webinar? Bye, 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 bye.